We're here on the USDCAD on the 240, and I have eventually, after literally about 2 months, got an entry on one of these higher time frame breakout patterns. I'm so pleased, sick to death of watching it. USDCAD 240, let's delete everything off. My entry is on the lower time frame, but I am going to talk through the trade on the higher time frame and why I'm going for 2 targets. Okay, all my analysis on the USDCAD is always talking about I believe price can come higher because we have left shoulder, head, right shoulder, violation to the upside. This violation is an indication we could go higher. We then have here a leg, and we have a breakout pattern. This is a wedge pattern. This breaks out bullish. We have already had the confirmation here. This is an initial structure high above this. Okay, we would be looking for targets to the 127. They have not been hit. So we've had the breakout, but what we also have now is the market consolidating again with another breakout pattern. Okay, this is all on the daily time frame. So we're looking bullish. Let's drop down to the 240. Okay, I am going to redraw these out. So we have a directional leg, we've got a clear swing here, a directional pole, we have the market. You can actually look at this as a wedge or a triangle, it's entirely up to you. It doesn't matter because either way the confirmation is at the top and we need a minimum of 2 touches, so it's valid. Here we have this does not touch the closes of the candles, so this is valid. We are confirmed wedging here. Wedging, coiling, whatever you want to call it. 1, 2, 3. This was our 4th test here, and let me just move this over. Look at what we have done here. We have had a violation of this level. Now we've not had a violation of that level. Okay, so this bigger pattern here, this bigger one right here, we have had the confirmed breakout here, but this one we've only had a breakout above this middle test, not this level. Something we want to bear in mind, but everything is indicating bullish here. Okay, now no entry here right now. There's no reason why we would be buying this up. The only thing I would say is that there is a higher high, higher close candle just here, but we are trading below it, but we obviously haven't closed yet. So let's drop down another time frame. Here on the 60, going to put a structure level on. It's going to have to be there. Okay, here on the 60, which is still one of my higher time frames, we have 1 test, 2 test. Look at the big wick we've got here. 3, and did have something else. Where was it? Got a couple of little tests here. Okay, there's nothing further left. So let's then drop down to the 15. So something to bear in mind, we have gone from the higher time frame here, which is the dailies, down to the 15, and we have then got another test right here, this structure shelf. And what we have is we have an AB equals CD pattern. That's not right. Let's draw that out again. Here, duplicate it, move it down to that point, and as you can see, price has now come to complete our AB equals CD pattern. We also have a back pattern in here, X to A to B, B to C, CD completion just down here. So AB equals CD pattern, back pattern, 4 times this structure level has been tested. Now if I just bring back on the orders though, I have got my stop a lot further back than normal, and I'm going to explain why by going to the 240, which is where we see our pattern. So this structure level just here, if we pull this out, having our stop underneath this level is preferred because if this pattern maybe turns and hits the 38.2 and comes back down, we don't want to be stopped out because we don't have this pattern completing at the lower structure level. So I want my stop below this level, and we just so happens to have a 140 psychological number there, so I've gone an ATR below it, so I've given this plenty of room. So if price does come down to this level, it's very likely I'm wrong and we're going to break to the downside. So but what I am also doing is, look, this is on the 4 hourly. This trade has been started here, which was back on the 26th of April. We are now the 20th of May, so nearly a month this has been ongoing here. And look how we're coiling. You know, we are not coiling like this. We are not coming and coiling tightly ready for the breakout. So we could very well do this for another 3 weeks, another month for all I know. So what I want to do is I want to play for my first targets up here, which is the closes of the candles, bank some profits because this level has been tested 3 times, once, twice, 3 times, move to break even and see if we do get the breakout. Now if we do, great, we can get targets up here. If we don't and we come back down, I'm probably stopped out from a second position, but guess what, I'll simply look for another entry reason. So targets are that 127 extension. So let's just leave the 127. I like to keep the chart clear. So I'm front running by 6, check it, 7 pips, 7, 8, no, we're going to make it 8 pips. This is the higher time frame on the 4 hour. So in terms of risk then, 43, the reward is a lovely 84, so that's a 2-to-1 just for target ones. And then we is looking for 143 pips. We're back for the update, and what a shame. Good opportunity this, particularly the BAT and the AB equals CD pattern. But as you see, we put up a battle and we're slowly working our way down, and we just never got the pop to the upside. Good structure level. And we edged our bets down here just to see whether or not, you know, we could get underneath the structure level. It wouldn't surprise me if from this point we just rallied on up to hit targets now. This being one of those fake breaks that just breaks out and instantly sucks all the way back up, stopping everybody out. I guess we'll know in a day or two. Out of that for... what did I lose on that? 1 second. And we're back. The risk I had on the table was initially 43, but I did reduce it down to 40, so just a 3 pip saving there. So minus 40 pips. This could be the start of my drawdown that I have been mentioning I could be going into.